Hello, everyone, and welcome to today's podcast. I am really glad you are here because today we're going to talk about something that affects every person, every business, and every economy in the world: accounting, tax, and finance. No, I cannot these topics can sometimes sound boring or overly technical, but the truth is that they are part of our everyday lives. Whether you are an entrepreneur, an employee, a student, or simply someone trying to manage money better, understanding finance is extremely important. So today I want to have a relaxed conversation with you about how accounting works, with taxes matter, and how financial decisions shape business and personal success. Let's begin with accounting. When most people hear the word accounting, they immediately think about calculators, spreadsheets, or tax forms, but accounting is much more than that. Accounting is basically the system business used to understand their financial reality. Imagine trying to drive a car at night without headlight. That's what running a business without accounting feels like. You might keep moving forward, but eventually you will crash because you cannot clearly see where you are going. Accounting helps organizations record every financial activity. It tracks sales, expense, investments, salaries, debits, and profits. In simple words, accounting tells the story of company through numbers. On the most important things in a code in keeping accurate records, a small mistake can create large financial problems later. That is why accounts pay close attention to the details. Business usually prepare financial statements to understand their performance. On of these statements is called the income statement. This report shows how much money the company earned and how much money it spent during a specific period. If the company earns more money than it spends, it generates a profit. If expenses are higher revenue, the company experiences a loss. Another important report is the balance sheet. This document shows what the company owns and what it owes. For example, a company may own cash, buildings, computers, equipment, of inventory. These are called assets. At the same time, the company may have loans, unpaid bills, or tax, or with these are liabilities. The difference between assets and liabilities represents the company equity or net worth. Now, something many people misunderstand is the difference between profit and cash flow. A company may appear profitable on paper but still face serious financial difficulties because it does not have enough cash available. This is why cash flow management is one of the most critical responsibilities in finances. Cash flow simply refers to the movement of money entering a living a business. If customers delay payments with expense continue increasing, the company may struggle to survive even if sales are strong. This is actually one of the main reasons many small businesses fail. Now let's talk about taxes. Taxes are often unpopular because people do not enjoy paying them. However, taxes are essential for society. Governments use tax revenue to fund roads, hospitals, schools, security, public transportation, and many other services. Business usually pay different types of tax depending on the country and industry. Some examples include income tax, payroll tax, corporate tax, and sales tax. For companies, tax planning is extremely important. Good tax planning allows business to reduce costs legally while remaining compliant with regulations, and this is where professional accountants become very valuable. valuable. A skilled accountant understands financial law, helps business avoid mistakes that could lead to penalties or audits. There is also an important difference between tax avoidance and tax evasion. Tax avoidance is legal. It means using legal deductions, credits, and strategies to reduce tax. Tax evasion, on the other hand, is illegal in it involves hiding income, facilitating records of refusing to report financial information honesty.